Hey everybody, welcome back to another live stream. So we are now just around 15 minutes away from the market close. I mean, it started off super eventful, crazy eventful day. We've also got Trump speaking to Netanyahu right now into the close. Let's just take a look at the countdown. 15 minutes left before the market closes. S&P has largely managed to regain most of its losses. Remember, we opened up close to 4% down on the S&P, on the NASDAQ. Bitcoin as well, looking pretty strong, to be fair. Just flat, down 0.35%. Again, a crazy day. I mean, it doesn't tell the whole story, right? Look at the wicking candles. We've had everything today. We dumped on the open. We had fake news around Trump pausing. We had all sorts going on, absolute craziness. But now we head into the close. Let's see where we do close up the day. Let's jump on over to listen to Trump.
Is low and ours is much higher relatively, and so it makes it very hard. I speak to a lot of companies that do business, tractor companies, and they say it's so hard to sell because what they've done is they've lowered the yen, or they've lowered the yuan, or they've lowered their currency, so that it's very hard to compete. We don't want that either. So we have a lot of things that we're talking about, but we're going to fix it properly, and it's going to be fair to everybody. And in the end, I think we're going to have a world that does a lot better, you know. But they have to respect the United States, and nobody but me would do this. Nobody but me would do this. You know, it would be nice to serve a nice, easy term, but we have an opportunity to change the fabric of our country. We have an opportunity to reset the table on trade. We lose billions of dollars. We lose close to $2 trillion a year on trade. We lose $1 trillion a year to China, $1 trillion. We lose hundreds of billions of dollars a year on trade to China. We lose hundreds of billions of dollars overall, probably close to $2 trillion. Why would we do that? Number one, why would we do that? And then you have to say, is it sustainable? Then you hear about all of the people that say, well, deficits. If we have a deficit with the country, or if the country has a big surplus.
So just to weigh in here, you've got Trump speaking with Netanyahu, doing the normal kind of tour. I mean, it's funny because the meeting was planned, and then I saw rumors on Twitter saying, oh, it's been cancelled, but then now he's turned up again. Like, imagine he flew all that way, Netanyahu, only for it to be cancelled. Anyway, they didn't speak about much, talking about the normal stuff for Iran, etc., etc. Then on the tariff conversation, Netanyahu saying Israel is going to go to zero tariffs. I mean, like, it's such a minute amount. I mean, it's ridiculous. I mean, we covered this off on a previous stream. I mean, we're talking in the millions, a couple of million or whatever it is, that's going to be sorted by Israel going to zero tariffs. It's more just Trump trying to parade a win to try to pressure other countries to win. If you calculate the billions of dollars that Trump is giving Israel in terms of military aid, I mean, the tariff is just stupid. I don't even know why they had a tariff in the first place, to be honest. They're deep in your wallets anyway, so what are you bothered about? So yeah, this is just political stuff just going on. In terms of the markets, I mean, I think CNBC's covering. Let's see what CNBC is covering off. Actually, we can switch off from Trump because he's not saying much in terms of the tariffs right now.
What are you supposed to do? I've been using the dock and canoe analogy for about 7-8 months now. The Fed's got the one side of their mandate, they got the foot on the dock. The other side of the mandate, they got their foot in the canoe, and the canoe keeps drifting further away from the dock. And so you know what's going to happen. It's going to fall into the lake. And so the Fed is in a really tough spot right here. And it's amazing how quickly they got into a tough spot for being in purportedly such a good place.
Very, very important point here. The Fed were in such a good place. Just to reiterate that point, like Jerome Powell was literally threading the eye of a needle, and somehow he was getting this soft landing, contrary to people's belief, right? And then obviously Trump's come in with these tariffs, and he's asking the Fed to cut rates. Like, it's not the Fed's job. The market is not crashing because we want 25 basis point rate cut, and we think he's cutting too late. No. That's not what's going on here. We know why the market is falling, to do with the tariffs, right? So there's no guarantee that, Jerome Powell coming out tomorrow and cutting, even though the hard data doesn't tell him to cut. I mean, it doesn't. First of all, it's not his remit to do so. Second, if he does so, the market's going to panic anyway, because they're like, why are the Fed panicking? It's better to keep some semblance of calm. Now, in the midst of that, whilst Trump is tweeting that on the one side that Jerome Powell should cut rates, he's also tweeting on the other hand that he's going to put another 50% on China tomorrow. So lots of stuff going on in the last couple of hours. We also said the EU proposed that maybe they'll do another 25% on the US, so going reciprocal to the reciprocal to the reciprocal. I mean, it's just insane what's going on right now. Doesn't make any sense. This could be one of the worst economic policy plays of all time. Of all time. Now, that being said, markets may capitulate, right? And the only positive we had today was what we saw in the charts. And that is this wick. When we got the fake news that we would see a 90-day pause on the ceasefire, what happened? Boom, Bitcoin went boom up to 81.2. We were ready to go. The S&P was minus 2 or 3% at the time, went to plus 2%. Huge swings. I mean, let me just show you that on the S&P as well, just to get the numbers accurate. I mean, the S&P was down as low as 481 and then went to highs of 523. So it went all the way up here, eclipsing the losses from Friday. It went back to the levels of where Friday opened in at, which is just insane. It just goes to show everything around this is centered around this tariff issue. And if we can sweep this issue away quickly, markets are ready to return. And I think that's what's exciting here, is we can focus on, us being able to rotate to the top side and V-shape recover out of this mess if we can get some calmness, if we can get people to just have a little bit of a level head through this process. Okay, so that's all we need right now. There's nothing fundamentally wrong at the moment with the markets, and we need to understand that. At the moment, there's nothing fundamentally wrong.
Let me ask you, when you look at the fact that bond yields are up today, there's obviously a bunch of speculation in certainly among market watchers as to why this is happening. Do you worry about foreigners selling our treasuries? Why do you think yields are up today, in fact?
Well, I'm glad you brought up the foreigners thing, because that's a point that I've been making in my recent speeches. That the net foreign investment position in the United States has really changed over the past, say, 15, 20 years. That while ago, the foreigners had a net position in the United States of $2 trillion, $3 trillion. So there was $3 trillion more foreigners were investing in the U.S. than the U.S. was U.S. was investing in other countries. That foreign position has gone from $2 or $3 trillion to $24 trillion. Today. And so there is an awful lot of foreign investment in the United States. That's one of the reasons, that is the reason primarily, I think, that the U.S. market has sustainably outperformed non-U.S. markets, really going back 10 years even versus some markets, 15, 20 years. Why is that? Well, it's because they're pouring money into the United States. It's one of these virtuous cycles. There's more buyers than sellers. There's more foreigners pouring money in. But now with all the rancor that's happening and the tariffs and the pushback.
All it is a concept that I had that I think is good. And now people are copying it. Maybe you want to tell people are talking about the Trump plan. Gee, why don't we do that? Would you like to answer that question?
I think what the president talked about is, first of all, to give people a choice. Gazans were closed in. And any other place, including in arenas of battle, I mean, whether it's Ukraine or Syria or any other place, people could leave. Gaza was the only place where they locked them in. We didn't lock them in. They're locked in. And what is wrong with giving people a
We
choice?
didn't lock them in. We didn't lock them in. You blockaded them.
About some countries, I won't go into them right now, that are saying, if Gazans want to leave, we want to take them in. And I think this is the right thing to do. If you give, it's going to take years.
Who wants to leave their
Gaza.
home?
In the meantime, people can have an option. The president has a vision. Countries are responding to that vision. We're working on it. I hope we'll have good news for you.
Stupid guy.
People really do love that vision. It's a long-term vision, but so importantly is to have that be a safe field, because you're right smack in the middle of the.
See, this is the problem with the people that were voting Trump. You voted Trump, and again, I'm not in the US, so I didn't vote for either of these guys. Couldn't care less for either of them. you voted Trump on the basis of whatever you voted for, but he's not following through on his promises. He's doing a great job of marketing, and so are his people that have voted him in, which is a big set of people, right? They're great on their marketing campaign, but what has he actually delivered? Has the Russia-Ukraine war stopped? No. Has the Israel-Gaza war stopped? No. Has he improved the stock market and put money in people's pockets? No. Has he reduced inflation or done anything meaningful on that side? No. Instead, we're looking at the S&P in bear market territory. We're looking at the NASDAQ in bear market territory. He's thrown us towards a global pandemic recession, right? Painful contagion going across the Asian markets we saw this morning. I mean, crazy brinksmanship. I mean, this is an egotistical play here. This is not rational minds. It's not calm minds. And people are taking the hit globally for it. Globally. I mean, we didn't vote for this guy. I'm sat in a completely different country, but it affects you, right? It affects you because he's playing an egotistical game with the whole world right now.
With the bombing, because they're bombing like crazy right now. They're bombing. I don't know what's happening there. That's not a good situation. So we're meeting with Russia. We're meeting with Ukraine. And
I thought you stopped the war.
Close, but I'm not happy with all the bombing that's going on the last.
Oh, you're not? I thought you said this would never happen if it was me. I thought you had the power to just click and it'll be done.
That was President Trump speaking with Israel's Prime Minister Benjamin Netanyahu in the Oval Office at the White House in a wide-ranging press conference there. Part of the conversation centered around Iran. President Trump saying that there will be direct talks and a big talk on Saturday at the very high levels. This is very different from what Iran has said in the past that has repeatedly rebutted.
Think about this process, how it's played out, and whether you join the critics who are becoming louder about these issues.
Well, I think the process, if you can call it that, is standard Trump. I mean, he's keeping people off balance, and I think he's doing it to a greater extent than even a normal Trumpian process would be, because he was short-circuited instantly in his first term. You know, they were doing it to him. They were keeping him off guard with all of these hoaxes and all of these lawfare and all this stuff. And now he's like saying, I can do that. I can play that game too. I can be one step ahead of you and keep you off balance. And he's doing that with his political adversaries domestically, and he's doing it with counterparties in other countries. And I would expect that this is not going to calm down. You know, that tweet, I guess, this morning that people talked about that tariffs were going to be delayed. There is no way that's going to happen. I think Trump is going to keep this going. And I don't understand exactly how he calculates, or the administration calculates, this strange formula to set these tariffs.
Let's just take a look at this article here quickly. CEOs think the US is probably in a recession right now, says BlackRock's CEO Larry Fink. Let's see what he says. Most CEOs I talk to would say we are probably in a recession right now. Now, this is an interesting point, guys. Most of the time, this is what the average investor doesn't understand. Most of the times when you're actually in a recession, you don't really feel it. Like, it's not the markets saying, oh, look, we're in a recession. We know we're in a... No. It's often it comes out in the data afterwards that, oh, look, we just had 2 negative consecutive quarters of GDP growth. That was just a recession, right? And then you deal with the aftermath of trying to get out of it. So it could well be the case that this is a bad quarter. It's a negative quarter, right? One CEO specifically said the airline industry is a proverbial bird in a coal mine, canary in the coal mine, and I was told that the canary is sick already, okay? So remember, what they're saying here is that the airline industry tends to be quite full. It's like it gives you the leading edge in terms of what's going on. They tend to feel it first, and they're feeling it right now. They're sick is what he's saying. The asset management executive also said that he thinks the tariff policies of Donald Trump could put upward pressure on inflation and make it difficult for the Fed to cut interest rates. This is exactly the point. It's so hypocritical for Trump on the one side to introduce this wide-sweeping tariff, but at the same time shout at Jerome Powell that inflation is fine, bring rates down. He wasn't bringing rates down anyway before your tariffs, let alone now that you've gone ahead and done some crazy tariffs. Doesn't make any sense, right? So the notion that the Fed is going to ease 4 times this year, I see zero chance of that. I'm much more worried that we could have elevated inflation that's going to bring rates up much higher than they are today, okay? And this is what people aren't talking about. Just like I'm trying to say there. Even before the tariffs, he wasn't in a position, Jerome Powell and the Fed, to bring down rates. In other words, he was tentative. If inflation goes up, why are we making the argument that rates will go down? If anything, he's going to keep them high, if not hike. And I think that's where you really end up in pain. We're already in pain. Imagine if Jerome Powell has to hike into this because you're in a period of stagflation, where inflation is high, but the growth is low. It's the worst place to be. That is how you get into a depression, guys. That is how you get into a long, painful recession / depression. Not exaggerating here. That is the blueprint from an economic perspective of how you enter one of those, right? And that's what we're playing with right now. Pricing in the Fed funds future market currently suggests that traders expect the central bank to lower by at least 1 percentage point, i.e. 4 cuts by the end of the year, which could be 4 cuts of 0.25 each. BlackRock as a firm held more than 11 billion in assets under management. Yes, we know. Okay, cool. So interesting take here by Larry Fink.
Much play in the system right now that we're dealing with.
There's a tremendous amount of lobbying. To your point, there's a tremendous amount of lobbying underway from people in high levels on Wall Street who are telling the administration that you got to do something, that you got to pivot off of this seemingly no pivot stance, or you.
Viewers, don't be scared to say hi in the chat. Don't forget to hit follow. Trying to increase the followers here on Kick. New to streaming on here. If you like these types of streams, support by hitting follow, by commenting in the chat.
Backlash before you are saying, I mean, look, the actual policy as described, it's one of those things that reminds you of something that's unsustainable by definition will not continue. The problem is, and we got the headline, the Treasury Secretary is going to be, leading these negotiations with Japan. If we're talking about country by country negotiations, like the market's patience will run out unless you get some kind of a clear strategy behind that. Until we get to that point, what are we dealing with? We're dealing with seeing if the market just gets bled.
We're just shy from a minute from the market close. Bitcoin sitting at 78,100. Of course, Bitcoin will not close because crypto doesn't close, but we're just trying to bounce off the bottom of this trend line here to mount another attack towards 79. Again, traditional markets are going to have to guide us here. Incidentally, the last kind of 20 minutes here on the traditional markets on the S&P have been quite strong. Seen a nice little rally here into the close, as you typically tend to. You tend to see a bit of a rally into the close every so often. So that you're seeing that play out right now. Similarly with the Nasdaq, 15 minutes of green here in the chart. And again, ending the day pretty flat, right? If you're looking at it from a daily chart perspective, the day itself is flat. But again, it managed to close the pre-market gap, which is impressive. I mean, that's impressive to do on the S&P, on the Nasdaq, and the S&P similarly as well. So managed to close the gap intraday of what the fear in the pre-market was. So basically, we woke up with a bunch of fear in the market, which we covered off this morning, and to a large extent, we've managed to kind of wipe that away. So here's the closing bell.
Certainly the mega cap. So the Nasdaq looks to finish green today. We'll wrap it all up in overtime with Morgan. I'll see you tomorrow.
That's the end of regulation. Faith, Investor Services, and Bright Portfolios ringing the closing bell at the New York Stock Exchange. Community West Bank shares doing the honors at the NASDAQ. Stocks closing mostly lower as a wild session comes to a close. Looks like we got gains on the NASDAQ here. But the S&P 500 touching bear market levels early in the session. The Dow swinging more than 2,500 points in trading today. And the NASDAQ trading in a nearly 10% range. It was, to say the least, volatile. Scorecard on Wall Street. But the action is just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan. John Fort is off today. We will be all over this volatility throughout.
Just wanted to chime in on this, guys. This is the bit that's worrying me now, is Trump rejects EU 0-for-0 tariff offer. So earlier in the day, you saw the rumors go around that, EU are going to offer 0-for-0. Sorry, that wasn't rumors. That was actually Ursula von der Leyen actually saying that they would put that forward to Trump's team. 0-for-0 tariffs. You do 0, I do 0. That sounds fair, right? After all, Trump, you're asking for it to be fair. The problem is that Trump and his team, and I noticed this from when Lutnick was speaking and also earlier on where I think, what's his name, Pete Navarro was speaking as well, They're not looking for that. They're looking for much more. And I think that's why they set the percentages so high. They never set the true percentages. They set the percentage to close the deficit. In other words, the US has had such a painful century of consumerism, of funding wars, putting themselves into such debt. And now they want someone else to pay the tab. They want the rest of the world to come and pay the tab. And they're blaming it on not being fair. Like, you know, they're saying to Japan, like, we bought so many of your cars and you never bought any of our cars. Because they have Honda and Toyota and all you had recently was Tesla. Why are you trying to compete? This is illogical. It's like me going to my local pizza place and say, hey, pizza place, I spent $1,000 with you this year and you spent nothing with me. Well, I wanted the pizzas. I bought the pizzas because I wanted the pizzas, right? So I imported the pizzas to my house. I don't sell pizzas. And if I did, they probably won't be as good as the local pizza shop. It makes no sense. But suddenly if I'm in debt, I'm like, hey, pizza shop, I spent $1,000 with you. You need to spend $1,000 with me next year so we have a free market. Illogical. So this whole narrative is a little bit worrying because what they're saying is, look, you're screwing us on trade. No, it's not. You know, it's not fair. That's what they're basically saying. They're screwing us on trade. In other words, what they're trying to say is, no, there's a bunch of other non-tariff barriers where you're exploiting us. I'm like, what are those? And I even heard Lutnick and the other guy parrot this off as well, that, oh no, but Europe has VAT. So what if Europe has VAT? What's that got to do with anything? So nothing. VAT is not a tariff. It's a local tax in that government. Just like the US has sales tax, here in Europe they call it VAT. So what? That is not a tariff barrier. It's not a barrier of them bullying you, right? It's really elementary, basic stuff, but it's worrying because it shows that the Trump administration have a high opening gambit for the negotiations. It's going to be hard to make progress with them if they're being unreasonable.
Role that individual investors have been playing in stock moves in general.
Yeah, I'm Morgan. There's a lot to go on here. I mean, the volumes have been incredible. We set records on Friday in both stock volume and option volume. So that's a tremendous lift. And from what we could see among our customer activity, the volumes were steadily increasing throughout as the week went on. Interestingly, among our 25 most active names, as of last week, 24 of them were to the buy side. The only exception was Alibaba, and that was very slightly net sell activity. So our customers remain buyers. There's definitely still a big, faith component in the market. Clearly, there were participants who had some issues, whether there were leveraged investors, people got a bit overexposed. I do think some of the selling came from risk parity funds, which then sort of require you to sell stock as volatility goes up, which is kind of counterintuitive there in some ways. But basically, I'd say many investors are holding firm, and you could see from today's activity when we went, from down 5% to up 3.5% in about a microsecond. It's telling you that there is still residual demand for stocks, and nobody wants to miss a rally.
Warren, I want to get your thoughts on what we've seen in some of the other asset classes as well, because crude oil, something I know you track, hit its lowest levels since April of 2021. It looks like we actually finished with crude back above 60 in the close a couple hours ago. But you also saw bond yields, which had come off dramatically in recent sessions, tick higher today too. What are these markets telling us?
Yeah, I think the first with oil, there's been a supply problem for a while. It's something we've highlighted for our clients. And I think that so there's a whole nother drama going on there with OPEC returning more oil to the market than investors had expected. And ultimately, there's a lot of confusion.
Just want to touch on this, guys. Just taking a look at this from the Secretary of Treasury, Scott Bessent, who was earlier misquoted apparently in the fake news that Trump was going to do the 90-day ceasefire. Now he's saying the following. Following a very constructive phone discussion with the government of Japan, President of the United States, Donald Trump, has asked me and U.S. Trade Rep, which is that guy, the other guy, Trade Rep, can't remember what they're called, to open negotiations to implement the president's vision for the new golden age of global trade. Okay, so remember, in this tweet earlier, this was when he came out and he's put an extra 50 on China, extra 50% on China. But look at this. Over 50 countries have responded both openly and positively to Donald Trump's historic action to create a fairer, more prosperous system of global trade. I think the reality is we're not going to get good clarity until we see the first couple of deals struck, but they've got to be meaningful deals, not the kind of like the Israel one, because as we know, Israel taking off their tariffs doesn't mean anything when they're getting billions of dollars in military aid, right? So you can't use that as a fair example. If they strike a deal with Japan, Canada, Mexico, UK, EU, China, of course, is going to be the hard one. That's the thing. I don't see China cracking. So if this relies on China cracking, I mean, and everybody else gets their house in order, I wonder how the market's going to feel just with, you know, a trade war with China, because even that's enough to cripple the market. Maybe not to the extent we're getting now, but I can see them eventually kind of getting EU to cave in or getting someone else to cave in. But China, I don't see that one. Oh, got some breaking news.
Oval Office pool spray with President Trump and President Benjamin Netanyahu of Israel. The President of the United States saying he is not considering any type of pause in terms of tariffs going forward, and in fact doubling down on his threat to impose an additional 50% tariff on China if that country doesn't lower its retaliatory 34% tariffs on the United States. So the President here holding a firm line and explaining that he feels that he has a once-in-a-generation shot here to reset the global trade table, as he put it, in terms of the U.S. Relationship with countries around the world. Interestingly, Morgan, in this Oval Office session with Benjamin Netanyahu, the Israeli Prime Minister said that Israel is committing to President Trump that it is going to lower its or eliminate its trade deficit with the United States. So the implication there is Israel is going to find some way to buy a lot of American stuff and do that pretty soon. And what President Trump is saying here is that what he wants is other countries to come to him to negotiate, and in order to negotiate, what he wants them to do is to come down to zero in terms of tariffs and then go below that in terms of what they call non-monetary tariffs or non-monetary barriers to trade. So the president here putting down a pretty hard line here, but saying he's simultaneously looking to raise revenue with these tariffs and have them be permanent while also engaging.
I want to see these other countries come out and expose the US for their non-tariff barriers as well.
It seems like it contradicts itself. I am curious, you sort of just took the words right out of my mouth, Eamon, and that is how closely now should we watch the dynamics between the US and Israel as a template from which other countries start to maybe negotiate their own bilateral
We just spoke about that. It's not a fair test. You can't compare.
Morgan, you used the word template. Benjamin Netanyahu used the word model in terms of what he wants the Israel example to be here. He said
exactly what they're trying to do. So obvious.
A model for other countries. Clearly, these are two political leaders who are joined at the hip in many ways politically, Netanyahu and Trump. And so this is among the friendliest negotiations that you might see on the global stage. But we also saw Scott Bessent, the Treasury Secretary, signal earlier today that he is opening negotiations with the Japanese government to lower tariffs and non-tariff barriers. So, I guess the answer is we'll see, right? I mean, this is both a White House that is saying that these tariffs are permanent and also a White House that's saying that it is engaging in negotiations to eliminate them.
All right, Eamon Javers, thank you. Notable that it's two very significant allies of the U.S. on the geopolitical stage as well that we're talking about here to start this process. Now let's bring in Leslie Picker with headlines from BlackRock CEO Larry.
It's like saying, hey guys, I want everybody in the world to buy my t-shirt for $1,000 each. And then I get my best friend to buy the first two.
And thinks he's pretty bullish despite the recent market volatility.
I would say in the long run, this is more of a buying opportunity than a selling opportunity. That doesn't mean we can't fall another 20% from here too. But I do believe over the long run, the vitality of the United States will persist.
He was a little more concerned about the macro picture, though. He said the, quote, ripple effects of potential tariffs is going to be long-standing. And he said the economy is, quote, weakening as we speak. In fact, he said most CEOs he talks to say, quote, we are probably in a recession right now. Fink said President Trump is focusing on areas that in the short run are, quote, very inflationary and destabilizing the economy. He said there's a, quote, need for the administration to focus on these pro-growth agendas, things like tax cuts and deregulating and streamlining the permitting process. He said the market's not focusing on these things and forgot about the power of AI, Morgan. But, you can't blame the market.
This is the bit, right? They don't want the smoke from China. This is what the China official says. China has taken and will continue to take resolute measures to safeguard its sovereignty and development interests. Listen to this bit. Raising tariff on all US imports by the same amount as Trump's latest tariff demonstrates China's determination to go all the way to wherever the US wants to be. right? I mean, this is where they're at right now. Beijing's aggressive posture signals that future retaliation will be more forceful, setting off an escalatory spiral and raising the odds of unmanaged decoupling in 2025. I think this is going to be the big bit, right? This is going to be the hard bit, is China. Right? Beijing's shift towards a more aggressive escalatory stance makes a near-term deal to end the trade war between the two superpowers highly unlikely. Until last Friday, Beijing's actions were considered relatively restrained and measured. Trump had also made warm comments praising Chinese President Xi Jinping and expressed interest in arranging a bilateral meeting. The abandonment of restraint in Beijing's latest retaliatory measures likely reflects Chinese leadership, diminished hopes for a trade deal with the US, at least in the short term. So this is the point, right? You disrespect there, and they're not going to have it. Maybe EU will buckle. Maybe your friends over Israel, because they're getting billions of dollars elsewhere, will buckle. What about these guys? And I think that's where smart investors are not going to, turn a blind eye if you get a couple of the smaller countries to agree to your silly terms. What about the bigger boys?
Tariffs. Yeah, I do want to bring back Warren Pies and Steve Stosnick to this conversation, get your reactions, gentlemen, to those comments from Larry Fink and even potentially Jamie Dimon in his letter. So, Steve, I'll start with you, because one of the other things that got my attention from Mr. Fink today in that conversation was the fact that, as Leslie just mentioned, he warned that this could be much more inflationary. He basically said that you should expect a Fed that may not cut at all this year. That is not what has been pricing into the markets here. And I just wonder how much hope is hinging from investors on the Fed stepping in with policy.
Well, yeah, Morgan, I think there were two things that that disappointed the market, and that's part of the issue we have here. Is I think there was economy, you really can get that scenario.
Warren, I want to get your thoughts.
I think I was just ranting to the muted. I was saying that, yeah, US is just, they're the biggest consumers on the earth, right? And they want other people to pay their debt. It's unbelievable. Like, it's like the neighbor buying 100 MacBook Pros and then getting angry at the Apple store, that they're not buying anything from them. Like, you're the consumer. The US are the biggest spenders in the world, both from a consumer perspective and also from a military perspective. You see what I mean? So it's unbelievable that they were kicking the can down the road, decade after decade. Oh, we'll deal with that problem after. They allowed inflation to go high so they can erode the value of the debt. They kept printing money. And we knew that. As crypto holders, we knew this. This is why we're buying crypto all this time. We knew fiat currency was garbage. We knew it was worthless. We knew that, they're going to debase the US dollar eventually to erode their debt. So we bought crypto. This is nothing new. The only thing that's new is they've suddenly come to a realization, we need to fill this deficit. How are we going to do it? Let's get the world to pay for it. What? The world weren't the consumerists. You were the consumerists. You were funding wars. You were buying, even as individual households, you guys were buying more than the rest of the world put together. So how are you suddenly, blaming everybody else and want them to pay your tab? Doesn't work like that, mate. It doesn't work like that. This is not about the rest of the world being unfair with you. This is about you not being able to control your purse strings. Got it out.
Talking about the rise in longer-term Treasury yields over the course of the day, closing above 4.2 on the 10-year, and it shows you it sort of reversed just a little bit of the recent gain we got. I'm open to the idea that perhaps there's a lot of selling what's already gone up in price, like gold, like longer-term Treasuries, because people are liquidating in general and deleveraging and perhaps going into cash. But there's also this question out there in terms of whether really reducing the trade deficit is going to reduce the amount of dollars in the rest of the world. And then you have the inflationary potential implications of tariffs. Whatever the reasons, I do think it's notable where we're sitting right here. We didn't get anywhere near the low in yields that we got in these prior two growth scares we had last year, especially down in the fall, that 3.6. Now, global yields are higher since then, so that spread hasn't changed very much, but it does show you we're not getting a whole lot of relief on borrowing costs domestically.
I always find this period interesting. So once most of the major markets close down, I find it interesting to see how does Bitcoin run in this period, right? The small gap you have before Asia starts opening up, because obviously last night Asia was what tanked the markets. Will it get a bit of a rally, show some strength, maybe try to sit around the 79 level before Asia opens up? That could be a play that we might see.
Vice versa, the correlation's turning negative again, but is not sustainably been the case. Finally, in terms of mortgage borrowing, that seems to be what Treasury Secretary Bessent.
What would actually get the Fed to react? He was of the mindset that, look, unless we get to a market-based sort of Lehman-style, Bear Stearns-style contagion risk type of market drop, that the Fed won't sort of react solely based on market activity. It would still look to economic conditions, inflation, the job market, et cetera. I just want to get your thoughts on that, because even though the sell-off that we've had over these last 3 sessions and really last 3.5 weeks or so, it does not even come close to what we saw back during the Lehman crisis, certainly not the GFC, or even going back to 87.
Well, the interesting thing is you made this point that actually the moves you've seen in the last couple of days have been more reflective of Black Monday, right? Yeah, if we continued to have that kind of move, we'd be very close to all-time records. What we don't know is what breaks, right? The financial system is an agglomeration of people doing certain trades, leverage trades. Dorson earlier was talking about basis trades. All of that can come unwound very quickly when there's a massive shock to sentiment and
just to show you, by the way, guys, just pulled it up for you guys. The S&P in the 2008-2009 crash went down 56%. We're about 20% on the S&P at the time of recording this video. So if I just go down now, in fact, we ended a little bit green today. So let's see, what are we actually right now? From the highs, we're just around... We just use the pre-market number, 17%. So 56% to 17%. You're looking at another 40% if you want to compare it to 2008-2009.
Move forward, let's bring in Alan Blinder. He is professor of economics and public affairs over at Princeton University, and of course the former vice chair of the Federal Reserve. Professor Blinder.
All right, guys, let's leave that there then. Just wanted to be with you guys during the market close. If you enjoyed these streams, do let me know, and we can do more of these as the days go by. Make sure you hit the follow button. Make sure you share it with others who will enjoy this stream as well. If you enjoyed it, let people in the Telegram know so they join as well, and we'll do more tomorrow. So Bitcoin doing all right. Not too bad. 78.5 as I leave this live stream. It's 12:30 here in Dubai at night. I'll try to get a few hours kip, and then let's see what the Asian markets are saying in the morning. Thanks for joining me, guys, and I'll see you in the next one. Bye-bye.